Today we're exploring non-current assets on the balance sheet. We've covered current assets. Now let's look at the long-term investments that power a company's growth over years. We'll define these assets, break down the three main categories, and understand how their value is tracked over time. Non-current assets are resources whose benefits are expected to last beyond 1 year, supporting the company's long-term operations. On the balance sheet, you'll find them listed right below the current assets as essential long-term investments. We group these into three major categories: property, plant, and equipment, intangible assets, and long-term investments. Each plays a unique role. Let's start with the physical assets we can see and touch, PP&E. Property, plant, and equipment refers to tangible assets used in operations, like buildings, machinery, and equipment. These are depreciated over their useful life, writing down the cost to reflect the asset's gradual decline in value. Depreciation stops at the salvage value, the amount we expect to sell the asset for once it's no longer fit for use. Next are intangible assets. These provide long-term value without physical form, like patents, trademarks, and software licenses. Acquired intangibles go on the balance sheet, but internally developed ones are usually expensed as they are created. Finite-lived intangibles are amortized over time, while indefinite-lived ones are tested annually for impairment instead. A key example is Goodwill, which arises when a company pays more for a business than its identifiable assets are worth. Goodwill is an indefinite-lived asset, meaning it stays on the books and is tested annually for impairment. Finally, long-term investments include equity in other businesses or bonds held for longer than 1 year. These represent a strategic stake in the future and are generally recorded at either their fair value or cost. Adding non-current assets to current assets gives us total assets, the full picture of what a company owns. Total assets are balanced by claims against them, liabilities, and equity, which we'll explore in future lessons. To recap, non-current assets are long-term resources like PP&E, intangibles, and strategic investments. Understanding these categories is vital for evaluating a company's long-term financial health and operational capacity. I'm Professor Matt. Thanks for joining me. I'll see you in the next lesson as we dive into liabilities. In our next lesson, we'll shift to the other side of the balance sheet to discuss liabilities and equity. See you there!